We open the cockpit. First rule, the 3-second gatekeeper rule. True momentum doesn't hide behind complex analysis. If institutional money is moving, it leaves a massive, unmistakable footprint the exact second you look at the screen. If the exponential moving averages are tangled, crossing, or flat, it's a swamp, a low probability mean reversion death trap. We don't try to fix the chart, and we don't argue with price. We close the asset immediately to preserve our mental capital. But look at USD BRL OTC. The exponential moving averages are fanning out cleanly toward the sky, confirming a powerful, structured river. The institutional wind is officially blowing. We zoom into the S5 microscope to hunt our premier entry. But before we look for a trigger, we do not use standard Japanese candlesticks. Raw candlesticks map volatile, erratic, open and close prices that are flooded with noise and algorithmic deception. Instead, we look through the lens of Heikin-Ashi. Heikin-Ashi isn't just an indicator, it is the actual source code of algorithmic trend tracking. Price drops back to test fair value at the yellow 20 EMA guardrail. The pullback looks small, a green candle prints, and we execute step 1, our $1 baseline anchor. But the structure breaches. The market slams downward by 52 points. A clean loss. The amateur panics. The sniper takes a breath and records the variance. Step 1, drop to a loss. In an emotional system, that's where the amateur panics, breaks character, and instantly double-clicks to force the money back. But in the harbor, a loss is just a line item of structural variance. We don't chase price up or down the river. We sit flat and let the asset reset. For an elite setup, we demand a strict 3-to-1 rule. This means our trend candles must display long, solid bodies with completely shaved heads or bottoms, proving total institutional control. Conversely, the pullback candles drifting back to our yellow 20 EMA equilibrium line must be small, weak, and filled with indecision wicks. That tells us the counter-trend players are completely running out of fuel. They aren't launching a structural reversal. They're just taking a temporary, weak, resting breath. If those pullback candles are large or matching the size of the trend candles, the ratio drops to 1:1. That is a drowning move, a freight train crashing right through your guardrails. We never step in front of a moving train. We also monitor our secondary anchor, the stochastic oscillator. We aren't just looking for lines to cross randomly in the middle of nowhere. We demand a valid, intentional hook occurring strictly within the extreme overbought or oversold boundaries, between the 20 and 80 levels. If it hooks at the 50 level, the market is completely hollow and floating. It lacks the directional momentum required to secure a tight 10-second sniper victory. No touch, no trade. We wait for the exact price where the big money reloads. We hold our finger completely off the trigger until the entire system aligns perfectly. Let's watch the layout form. We do not use Martingale. We do not engage in emotional revenge trading. A single loss means nothing to an account wrapped in a 10-sequence capital shield. We advance along our linear risk progression ladder. Step 2 is set to $2. We wait for the next premium footprint. The perfect flow presents itself. A slow, exhausted resting breath back to the EMA floor. The red candles shrink. The next candle prints a solid, flat-bottomed green body, and the stochastic hooks out of the lower boundary. We execute step 2 with an exact 10-second fixed expiry. The entry price is premier. 10 seconds later, it clears a profit. The ladder resets to $1. Trading isn't a game of predicting the future. It's a battle of absolute personal execution. If you're ready to step out of the chaotic sea of emotional guessing and build your own structural baseline, join the crew inside the Harbor Discord server.